Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, September the 17th, 2010, and it's time to look at the markets. Check this out. Okay, let's start today looking at the NASDAQ. This is an interesting chart for many different reasons. First off, we told you yesterday it's 7 consecutive days to the upside, which is the high end for this chart. Looking anywhere on a 6-month chart, you'll find that 7 is the most number of consecutive days to the upside or to the downside before you get a reversal. Today, we went up a day more, so we now have 8 consecutive days to the upside. 1, 2, 3, 4, 5, 6, 7, and 8. Okay, that doesn't mean that she has to turn around at 7 or at 8. She can continue to push. The point is that it's above average and it will not be sustainable. A couple of things to note here. You're going to hear about this today. You've got a high point here and now a higher high here. Okay, so it's going to be looking kind of bullish to a lot of guys out there. The problem, of course, is going to be the high point here is absolutely unsustainable, and therefore it should be mute. It should not be considered, because all these gaps down here means you're building upon a little foundation of sand or hot air. Okay, and all of that is absolutely worthless. Any rally built upon it will just be a failure. You know that. So you also know you're overbought. The slow stotch is at 98. It only goes to 100, so buying here would make absolutely no sense whatsoever. You've also got a gap down here, okay? And again, like we talked about in a previous video, I think it was earlier this week, maybe last week, we talked about the major bearish divergence that you noted, telling you that this low point of 2061 will not hold. It's going to fall below that level anyway. Another item to consider on this chart, a lot of traders will be looking at this weekend. You'll see an increase of volume on Friday's activity on this day. The problem is it too should be mute because it's building upon an already extended activity here. It's not actually a quality entry point for the longs, and again, you're building upon a failure right there. That's just guaranteed. So yes, you can continue to move to the upside. You've had 8 consecutive days to the upside. The market wants to push more. It can. The reality is you do not want to be a buyer here. It's not a quality buy opportunity. In fact, the more over extended it gets, the more you'd want to short that. Another item we do have to note about the NASDAQ that we didn't have earlier this week. Earlier this week we were on the uptrend with the histogram, each bar being taller than the previous and just ticking higher and higher. Now we've rolled over. Okay, this has been seen before. All right, they tend to be problematic, telling you when the rollover is coming, and so you're getting those signals now. That's another item to note. That's telling you this market is in fact topping and not a breakout buy opportunity like some people might try to tell you this weekend. Lastly, a quick look at the RSI indicator for the same index, the NASDAQ. You'll notice it's at 66. 70 is extremely overbought. Okay. A quick look here at the Hang Seng, the Hong Kong Hang Seng Index. You'll notice that you have moved to the upside today, and a strong move to the upside. But again, even though it's a higher high like that, all right, you still got the bearish divergence now topped here, here, okay, on the RSI as well as here. All right, see these points here and here correspond. Right. Basically, all it's telling you is price activity is going to fall back down and take out this low point right there. Okay, we're talking about this all week, so keep in mind whenever you have a move to the upside, it doesn't negate the fact that you're still going to fall lower. What you want to do is use it for let the bounce happen and then find the overbought conditions and short them because they can't sustain that level. And you'll notice if you look down at the RSI, your RSI condition is now at 70, all right, 70.3. That's extremely overbought. You also have this bearish divergence formation right there, and you're still ticking up on the histogram bars here, so you may want to wait for that to actually start to roll over like you saw back here, all right, like you saw back here, okay? So you can wait for that, but that'll be the last signal you're going to get on this chart. A quick look here at the Russell. You'll notice we didn't basically do anything today. We were up about 3 points for the day, but it's that same continuation we talked about yesterday, the kicking pattern, down, up, down, up. It's not going anywhere. It's just trading sideways right here. We have not made a higher high yet on this one. Keep that in mind. It could still happen. Market can keep pushing to the upside, but we're seeing signs again and again and again that these markets are already rolling over by their momentum. So look at the histogram on this one. Quick note of the histogram, you'll see we are already rolling over here the past 2 days, so that's important to note as well. keep an eye on that, and you still have these divergences telling you all of this is going to get taken out anyway. And again, lots of gaps here as well. Okay. The S&P 500, exact same story, overbought at 95, 94. It only goes to 100. Less conviction today on the S&P, but it's the same basic story. You did make a higher high intraday from this point versus the 1129 level. The high for the day was 1131, so it is slightly higher, and you could still press even higher. It's not a question of whether it can be done. It's a question of whether it's sustainable or not. And with all the gaps below you, the divergence we've shown you on the older charts, and your overbought conditions of your slow stocks and so forth and so on, it's not a quality buy opportunity. You want to use it to either wait for it to get to a position where you feel comfortable shorting it, but do not buy it. Again, note your RSI is at 63, 70 is extremely overbought. The histogram right here on your MACD is already rolling over. Okay. Okay, up to this point, we've shown you chart after chart after chart that is overextended, and everyone is looking for when's it going to roll over. Well, you can look at other charts and get some kind of a clue on that information if you remember that certain charts have led us into this mess, and certain charts are going to lead us out and then lead us back in. We talked about the FTSE. We've watched as the FTSE has been the first one to bring the world markets down with all the news going on over there in Europe. We've watched the FTSE lead the way down for the U.S. markets, and we've seen it lead the bounce back up. And now we've got a major, major sell signal. Okay, today's activity is very bearish on the candlestick formation alone, and it's a peak signal. You definitely would be looking to short that. There's many different ways to do that. If you're looking for a signal, to, down to the candlestick itself, when you're waiting for the very bottom for a hammer formation, or the very top in the inverted hammer or the shooting star pattern, you would look for this candlestick, and this would be a very, very strong one. You're again overextended. Also note the low points here and here. Okay, trending lower now. It's another sign of rolling over here. It makes perfect sense to me. We've got news out of the markets today talking about Ireland, potential there, rumors going around they may or may not need help or another bailout kind of thing. Of course, they denied it, but with all the news that's been coming out with Germany and France and Ireland and Spain and Portugal and Greece and all that stuff is still out there. None of those problems fundamentally have been resolved. What brought us down here is now still in play, still a major issue. We know more about the problems now. We know these countries have been downgraded even further, which puts more strain on their finances, and now we're bouncing back up here, which doesn't make any sense. You cannot sustain that fundamentally. So look for the rollover. That's what you should be doing, and use that in your favor. It should be noted as a leading indicator. If you have been tracking the FTSE, we've used it a few times to tell you, the FTSE is peaking, so look for your overall markets to do the same, and this is exactly what we're getting. A sign right there. You also notice you're getting further along in your rollover of the MACD histogram. All these signs are pointing south. Now let's confirm that. Here we are looking at the oil index. This is a pretty good chart to watch the true opinion of the economy. You'll notice that we talked about this in the past, and we've used it in the past, that oil has been able to show the peaks and new lows for the market before they actually get there. You'll notice a lot of your market averages, they didn't actually have the bullish and bearish crossover of it. I'm sorry, the bearish crossover of your 250-day moving average until much later in the period. This time period here was, I think, was the earliest, and you had some over here, but oil was one of the first to signal it. Okay, now you're seeing oil rolling over right here. Here we go down to the downside. Even in today's activity, while a lot of the other markets were up, oil was down. You'll also notice you're starting to roll over here. You've had a crossover of the slow stotch. You'll also notice the histogram on the MACD is already trending down. Okay. This is more confirmation that markets may in fact be rolling over right before you, and you just haven't noticed yet. A quick look one last time at the VIX. That'd be another confirmation for us. As we've stated before, the VIX can be a confirmation or tool for double checking your analysis of the overall markets. If the overall markets are bullish, the VIX should be bearish, and vice versa. In this case, the VIX is very bullish. You'll notice a low point here on the slow stotch and a higher low here. Okay, that tells you that the momentum to the downside is weakening, so we look for that momentum to the upside to increase. Here you have price activity trending lower right here. All right, that was an overshoot on the sell side, so you want to be buying here. This is known as a bullish divergence, and you expect price activity to move to the upside. This is also confirmed on the RSI. Here we are looking at the RSI in the same time period. Low point here, higher low here, ticking up higher. Also note the MACD histogram bars rolling up to the upside, right? Awesome. The conclusion for today's video, this week's video, should be that all market averages are overextended. We are already seeing a few rolling over and expect them all to do the same. Do not be a buyer of any fake breaks to the upside, etc., etc. You want to look for short opportunities or remain in cash. Okay? Awesome. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, we'd appreciate if you'd subscribe to our YouTube channel. That helps us stay free, and then we don't have to hit you with a stick. A quick look at our disclaimer, read it and weep. Okay, we're going into the weekend. I want everybody to enjoy the weekend. Remember our live trading course for next month. You can already register for that, next month. Anybody who does that gets the rest of this month absolutely free. Also, I'd like to thank everybody for referring your friends, and sharing our videos online. Appreciate that very much. God bless. Take care. I'll see you all next week. It's been a long one.